Let's start off with the markets. Clearly, we have seen a little bit of pressure coming through on the local bourse, but we are seeing pockets of strength coming through from that gold mining index and, of course, the platinum index as well.
Hi, yes, Eleni. We saw with the launch of the new platinum and palladium ETFs that we've seen a run in those particular commodities, and ETFs really offer you direct exposure to those commodities without the risk of a management team and all the risks associated with getting the metals out of the ground. I think fairly low volumes, very quiet. Markets are pointing to the downside. We're looking forward to the opening of the Dow, but we're probably going to see a bit of catch up there with the S&P futures looking very weak today, so probably more risk to the downside for the rest of the day.
We've also got US earnings well underway. We are expecting some numbers out of IBM and CSE Group. What are you expecting on that front? Do you think it's going to be quite key in terms of the way that the Dow will be performing today?
Eleni, when one looks at the earnings, over the past week, we are expecting there to be a little bit of weakness in those numbers, and one really has to look into the detail, the actual detail of the numbers in terms of their retail sales numbers that are going to come through, and that's where we're going to really see whether their earnings are really going to carry them into into 2010.
SAB came out with a trading update, and unfortunately, it wasn't what analysts and investors out there had expected. Were you relatively disappointed with these numbers, considering that SAB, of course, has that exposure to China, and we know that Asia is doing relatively well?
Eleni, when one looks at the numbers, I think analysts were very disappointed. Even if you look at the emerging market results, which make up about 90% of its earnings, and they did fairly well, they still didn't meet up to analysts' expectations. But in all fairness, the stock has run more than 50% since March last year. So I think a lot of investors, being cautious, taking some profit off on the table. If one expects a consumer turnaround into the new year, it is a very defensive stock, and some investors might see it a little bit cheap at the moment and take an opportunity to buy it at some of at some of the cheaper levels today. So definitely a stock to be invested in if you buy into the 2010 recovery, a long-term position for 2010.
Looking at SAB, and of course we know that they were bidding for a division of FEMSA, and we also know that Heineken actually beat them to it. Do you think that SAB needed a deal such as one that Heineken got with FEMSA, or do you think that it was a good decision to actually not overpay for something that they thought wasn't worth?
I think one has to be cautious in these markets when one looks at acquisitions to not pay for acquisition, which you didn't find value in. So I think it will move into their benefit. I think they've made a wise decision, and we, hopefully we'll see them, do really well in 2010.
Looking at earnings here in South Africa, we haven't really seen many numbers out, but of course those retailers have come out with some interesting trading updates. Any specific company that has stuck out for you that you would say is a good company to invest in right now? The big focus this year, I think, in South Africa and globally as well, it's about earnings matching up and catching up to those share prices which have run significantly.
Eleni, I think we've had some surprises on the retail front. We saw ShopRite coming through with really good numbers, but I think the food retail sector is going to come under pressure in terms of lower food inflation. My big surprise, which I was looking forward to, was Woolies. We saw that coming through. It looks like they got some, they want some more market share. Mr. Price, however, disappointed. So I think Woolies, we could see in the next year, will definitely, they've got new strategies in terms of refocusing their market in terms of the clothing sector. I think they're going to surprise, and I really like Woolies. Clicks is also a very good a retailer which has exposure to, in terms of pharmaceuticals, as well as your your cosmetics, and they should also do really well. I like those two for 2010.
Of course, we did say earnings a very important focus right now, whether they are going to be catching up to those share prices. Yolanda, are you confident that the markets can get that right, that have seen some pockets of strength coming through with some of those key companies, and we'll see those earnings in fact catching up at some point?
Eleni, you know, when one looks at the run from March, the market has priced in a massive recovery, and there is a risk, and we've seen it. You know, Amplats, SA Breweries, we saw Alcoa, you know, JP Morgan, even though the results came out better than expected, their retail sector really disappointed. You know, this is the reporting season that is going to confirm whether investors' belief is valid or not. So I think more risk to the downside, because we haven't, even though the recession has stabilized, this recovery period, we don't really have a timeline as to when we're going to see consumers coming back in. Investors should always be cautious, look at your defensive stocks, your SA Breweries, your Barties, and even some of your banks will do really well in the long term. Those that are focused at your consumers.
Yolanda,